Okay, I'd like us to look at some of the instruments that are usually traded in the money markets. Of course, I have the commercial papers, we have bankers' acceptances, treasury bills, of course. These are the instruments, some of the instruments that the central bank uses to control liquidity in the market. But one interesting thing about these papers or these bills was that their value rose in the course of the year. For instance, in the first quarter, we had, for the commercial paper, it rose by 15% to 10.8 billion naira at the end of the first quarter, compared to 9.3 at the end of 2013. For bankers' acceptances, it rose by 49.8% to 30.7 billion naira. What do you think would have led to this increase in the course of the year, given the fact that the liquidity issue in the market was of concern to investors?
Well, let me say that the central bank will not use share papers and the bankers' acceptances. These are instruments that are used, that are available in the banking system. Aside from treasury bills and some other instruments that the central bank is available to manage liquidity. However, what you are saying in terms of, business activities will require funds being raised, by major fund users, large corporates, because they are the ones that can play both the BAs and then the CPs market. So I would say that it was a level of business and economic activities in the system that occasioned, the surge, especially in the use of bankers' acceptances for those who borrow, from the banking system to actually, which they of course they must have put into use one way or the other. Same for the commercial papers, and I will even confess that the level of commercial paper activity has not been quite, has been relatively low. But with the FMDQ has with the cooperation of the central bank, has they've come out with come up with rules, rules that will guide the use of commercial papers, and then we are likely to see a surge, in the use of the instrument in maybe about a year. But beyond that, I think the central bank will require the use of treasury bills, as well as there could be the normal treasury bills, and then OMO bills are used for purposes of actually managing liquidity in the system.
Okay, let's talk about the bond markets. How did?
Well, you discover that the activities in the bonds market, when compared to the previous year or previous years, and like we've said, investors will take a look at a number of things before they can make investments, in some either countries or regions or economies. And this year, because of the, last year, because of the level of so much level of uncertainty, politically, given the fact that election will come very shortly. So foreign investors some of the critical decisions taken were informed, by that. But beyond that, we shouldn't forget that the U.S. economy and some of the actions, taken by the managers of that economy had prompted major investors, to take a look at that market as opposed to some of the emerging markets, of which Nigeria is one. And of course, the impact of the global oil price, on our economy, as well as other emerging markets, had actually reduced, the level of investment, of investors, especially as far as the market is concerned. And so the risk component is, largely, we say, relatively higher than what it used to be. And so what had happened is that if you compare the level of activities in that market against what we've had previously, that you discover that relatively lower than what it used to be.
And this leads me to my next question, which has to do with the issue of capital flight from the capital market to the money market. We understand that some investors prefer to put money into the money market because of the volatility that was in the capital market, and so because of the high interest rates.
Well, that market was quite attractive before. I mean, even year 2014, I think, until I think after I think by the 5th month, 6th month or so, the pattern changed. Of course, for obvious reasons, given the fact that, like we said, investors were looking to, I mean, they would take a look at the risk profile of the country relatively, given the fact that Nigeria being, because activities of Boko Haram, security issues, and some other economic fundamentals arising from the fact that 2015 will be an election, I mean, largely much campaign in 2014 and then 2015, early 2015, the election year. However, talking about the migration, you know, from the capital market to the money market, you will discover that well-informed investors, and depending on what they are looking out for, well-informed investors, and depending on what they are looking for, a short-term investor in the capital market, for instance, you discover that the market wasn't quite attractive. Short-term investors don't buy and sell. It wasn't quite attractive most part of last year. And so for those who run away from risk, for those who are looking up at short-term gains, that market was not attractive. And so because of the relatively high interest rate, I mean, not less than, say, you take a look at 10%, 11%, 12%, which was quite attractive enough. So you have some investors moving from that market to the... However, largely, I think exit of foreign investors was what really accounted for the drastic drop in that prices in that market, and not much of, oh, let's move to the money market. Where, yes.
Okay, before we go on break, I'd like to
but
talk about...
individuals, yes, but not much of corporate investors.
Okay, the foreign exchange market, the interbank foreign exchange market, and of course, there are a lot of developments in that market towards the end of the year. Could you just tell us what really happened?
Well, I think largely the central bank had tried all through the year to ensure that demands, you know, for foreign exchange, demands were met. However, and it was even while there was, we had noted that exchange rate was likely, you know, to move from where it was. The central bank had committed, you know, to ensuring that Naira did not lose much value then. But of course, we shouldn't forget the fact that if you take a look at the foreign reserve, what was being used, you know, to defend the value of the Naira, and then you take a look at this, the surge in FX demand arising from maybe foreign investors who were exiting, and then arising from other needs, you know, of business people and business concerns. It was after a little while, I mean, it was obvious that the central bank might have to drastically, you know, reduce its reserve, you know, to meet market demand.
So we had a huge high demand, rather.
Very, very high demand.
Was the supply end taken care of adequately?
You couldn't take care of the supply end because it was the major source of our foreign exchange earnings in Nigeria, oil. And as we are talking, I mean, the price is below 60. So from what it, I mean, average of about 110. And so I mean, the reality of it was that the central bank needed to do something if all the reserve will not be frittered away in terms of meeting a demand. And unfortunately, when you take a look at the, if you analyze the demand, I mean, based on the picture that the central bank was seeing, it was believed that there were no need to actually use the scarce foreign resources to meet some needs which they believed, which central bank believes in its wisdom, that there was no reason to meet such needs. And so the gap between supply and demand got widened. And don't forget that as a result too, speculators, you could not, there was no way you could eliminate them once there is disparity between official market rate and then the what I would call parallel market rate. So about 4 rates: the official rate, the central bank window, the interbank rate, the BDCs, and then the black market. So, and the wider you have between that official and then where you have the parallel, the more likely that speculators will come into the market. And so actions of the central bank were aimed at possibly eliminating those speculators. Now, it hit the market very badly.
Okay.
But the truth is that we have to work in cooperation with the central bank to ensure that that market comes back. We require to have market-determined rates, as opposed to rates that are not really transparent enough.
Okay. Wale Abi, I would like you to hold your thoughts for us for a minute. We're going on a break. Wale Abi is the Executive Secretary, the Financial Market Dealers Association, and we have been reviewing the money markets for 2014 together. We'll be right back.